Hello, everybody. Welcome into our first time buyer workshop. My name is Raul. I am a realtor over here that works with Voltaire Lepe. Some of you may know me, but Claudia is joining us as well. She is also a realtor here with Voltaire Lepe's team. And we are here to talk to you all about the process of being a first-time home buyer, what that entails for you if this is going to be your first home that you are buying. Claudia and I want to make this very interactive, and we ask that all of you guys, if you are in a position to do so, go ahead and turn on your camera. We want to see your faces. It hypes us up. It lets us know that you guys are engaged, and it just helps us just do a better job for you guys. So if you can, please just go ahead and turn on your cameras for us, but we'll give it a few more minutes just to let everybody else join.
Yes, we are. I'm so excited. Raul, are you excited
I'm really excited.
to have this opportunity and to co-host with you?
Yeah, absolutely. I think that there's a lot that goes into buying a house as a whole. And whether you bought 3 houses or 10 houses, I think it's always a scary move. And it's really important to just have the right team with you, right? And before you can play the game, you got to know the rules, right? If you don't know the rules, you might make mistakes along the way. And so that's what we're here to teach you guys and just kind of talk about is the rules of real estate buying. That way you guys can do it the right way the first time.
Yes, I agree. But should we get started or give it a couple minutes?
Let's give it, say, one more minute just to let anybody else that's trying to log in an opportunity to join us. But in the minute that we're waiting, I do want to open it up to you guys. Do you have any questions for us at the beginning? Not sure if there's something that you came in already hoping to get answered. We want to make sure that we're able to answer everybody's questions. So if anybody has a question, feel free to please unmute yourself, ask the question. Let's make this very interactive. If you're a little shy, it's okay. We still want to help you too. So go ahead and just throw your question in the chat. We'd be more than happy to help answer that question for you.
Yeah. Well, are we already streaming on Facebook?
I don't think we are. If you can help us out with that part there, please.
Yeah. I'm co-host, right? On here.
I believe so. And if not, I'll change that right now. There you are. You are now a co-host. All right. Doesn't look like anybody has any questions for us to get started. So, Claudia, I think that we should start with some common misconceptions that come with buying a house, some of the myths that are out there. But before Claudia and I start talking about some of the myths that we hear on an everyday basis, just from dealing with buyers every single day, I want to ask you guys, the audience, does anybody have any myths that you have heard that, or maybe a misconception, or maybe something that somebody told you that doesn't really sound right that comes down to buying a house that maybe you wanted some clarity? Who here has heard of some myths? I don't know if anybody on this call, Tina, Rosalie, Juan, Vanessa, if anybody has heard of any of these myths out there, because there's quite a bit of them out there. Does anybody want to share maybe a myth that you've heard lately about home buying? Or something that somebody told you may be true, but you think is a myth?
No,
All right. Looks like
I'll
we got a
start.
shy crew today. So yeah,
I'll
please,
start
Claudia,
with one.
what's one myth you've
Um,
heard?
do I need a 20% down
That's a really
payment?
good one. How many of you over here have heard that you need 20% down to buy a house? Anybody? You can raise your hand digitally too. You can throw an emoji if you want. Show some love that way. There we go. Got some hands coming up for sure.
Oh,
Yeah.
nice.
So I've actually heard that a lot too. And actually, especially in my family, I come from a family that buying a house is not normal. What's normal is get yourself a safe paying job, get yourself a house that you can afford rent wise, and just rent for the rest of your life. As long as you got a roof over your head, you're good, which you should be grateful for, having a house, having a roof over your head. But at the same time, we want to empower everybody to become homeowners, because there's a lot of benefits that come with becoming a homeowner, where you can still put a roof over your head and over the head of your families, and have some long-term benefits that come along with that. So to answer that myth, Claudia, no, you don't need 20% to buy a house. If you're a first-time buyer, you actually have access to a lot more programs than, say, an investor would, right? If you're an investor, yeah, if you're trying to buy multiple investment properties throughout the year, you may need to come in with 20, maybe 25% down as a down payment. But if you're a first-time buyer, it's going to be the first time that you bought, or say you bought a house, but it was like 2-3 years ago, you still may be able to use your first-time buyer program, and you can come in with as little as 3.5% down, or even 0% down payment if you're VA, right? Now, Claudia and I, we just want to let you know that we're not lenders, but we're in the real estate game every single day. We're looking at people's loans every single day. And although we're not lenders and we didn't go to school to become lenders, we became very familiar with the products that are out there because of how often we're dealing with buyers that have different loan products that they're using, right? So if you are looking to buy a house and your goal is to save 20%, or I've heard this a lot too, maybe not 20%, but I need 100 grand. I just need to save 100 grand. I don't know if anybody has heard that magic number of $100,000 where, hey, I need $100,000 before I can buy a house. You know, I hear that and I hear 20% a lot. This is your call letting you know that you don't need $100,000 and you don't need 20% to buy a house. You can do it with as little as 3.5% down. Or if you're eligible for a VA loan, which is a military loan, and they extend it to more people than just the military. And we can talk a little bit more about that. So if you wanted to learn a little bit more about what type of loan options are available to you, and of course, at no obligation, we're just here to give free information. Claudia, if you can just put our information into the chat, we encourage you guys to either speak up now or give us a call, give us a ring after, or shoot us a text message after this call, and we'll be more than happy to help answer questions that are specific to your scenario. But we just want to let you know that home buying isn't as hard as people portray it to be. I have another myth, Claudia. Oh,
I have
hi,
a question.
Vina.
Hi.
Hey, Diana, how are you?
I'm good, thank you. I'm only gonna start my camera when I have a question, then I'm gonna hide my face again. But I do have a question regarding the first time buyer programs. And also in regards to the question that you just brought up as far as do I need what was it, 20%? Is the only other option a first time buyer program?
Should I answer and then you follow up, bro?
Go for it.
So FHA, it is a product loan. So that one allows you to come in with 3.5 down. There are other assistants as a first time home buyer that can help you come in with that amount with a down payment. The second part of your question was, so you don't need a 20%. Sorry, I lost my train of thought. Yeah.
Yeah, no
Help.
worries. But yeah, so it's essentially there's different types of products, right? And Claudia
Yes.
mentioned FHA. A lot of people, I'm sure you've heard conventional, and now we're
Yeah.
over here talking about VA. So there's a lot of real estate jargon, if you will, that goes into the types of products, right? Now, just to keep it very short, because we don't want to mislead you, because we don't really know your situation, right? Whether you bought a house, so every 12 months, you have the opportunity, right? And it doesn't apply 100% of the time, but you have the opportunity to use a first time buyer program, which essentially will allow you to buy a house with less than 20%, and sometimes as low as 3.5%, right? So
that's my answer. That's the clarification that I didn't know if it was one or the other, or if that's what one then went hand in hand with the first time buyer program. So
got it, for sure.
got it.
Yeah.
Thank you.
Awesome. Yeah, my pleasure. Great
Okay,
question.
I'm hiding
Thank
my
you.
face again.
Okay. Sounds good. Awesome. Before we move on to the next myth that Claudia and I hear on an everyday basis, does anybody else have any home buying myths, or maybe something that people have told you you need, but you're not sure if it's really true or not? Any myths out there that anybody wants to throw out there? And if not, then I'd like to ask Claudia if she's heard this one. I get a lot of people that say, hey, I have student loans. How bad does that affect me? Can I still buy a house with student loans? What do you say to those people, Claudia?
I say yes, you can. Just you can't be late. You have to keep up with your payments. Your student loans should be up to date, and depending on your debt to income, it shouldn't affect you as much. And then I see some questions on the chat. Do you want to answer those?
Yeah, let's knock that out. But to just piggyback on what you just said, so it might affect how much purchase power you have, right? Because you have an obligation to pay this debt. But more important than that obligation is going to be how consistent are you with keeping up with those payments, right? If you're keeping up with those payments, that's going to be the biggest difference maker as to whether or not you can buy a house with those student loans. Vanessa mentioned in the chat, 700 credit score. You need a 700 credit score. Believe it or not, everyone, we have lenders that can help with a credit score right around 580 and above. So there's so many different programs out here that different lenders specialize in different areas, right? We have lenders that specialize in first-time buyers. We have lenders that specialize on people that need a little bit of credit repair. So if you have a 580 and above, just know that you have an opportunity to buy a house. And if you're not quite at a 580, our lenders are really good on getting you a plan and setting you on a path so that you're able to reach that goal of being a homeowner. Next that I see is, I heard that I should max out the amount of loan the bank gives me. Did you want to knock this one out? Or did you want me to answer, Claudia?
Go for it.
Cool. Yes, definitely max out your loan. And there's a few reasons why, right? The first reason right now is interest rates. I'm sure a lot of you have been hearing for a while now. Rates are extremely low. They're so low, but what does that really mean to you as a consumer, right? Now, when you're borrowing money, and a lot of you, I'm sure you know Voltaire. He's the owner of this company here, Lepe Tendwell Properties. He just explained it to me in a way that just made so much sense, right? Now, you're borrowing money from the bank, and they're saying, here's today's money. You can buy a house with today's money, but I'm going to give you 30 years to pay me back. And I think we can agree that a dollar today is going to buy a lot less in 30 years, right? Now, with that being said, Voltaire says that back in his day, a Snickers bar was 40 cents, right? Now, if the gentleman at the store told Voltaire, hey, Voltaire, you can lock in this price of 40 cents for this Snickers bar for the next 30 years, right? That would be a great deal. At the moment, he'd be like, well, I don't know if I want to lock this price, right? Because it's 40 cents, maybe they'll be cheaper, right? But if you're thinking about it, well, now that Snickers bar now is almost $2. So if he would have locked in that Snickers bar at 40 cents, Voltaire's looking like a genius, right? So if you're buying your house with borrowed money at a rate that right now is a lower rate than inflation, you're able to buy an asset in which the life that you have it, whether it be 5, 10, 30 years, it's going to appreciate. You're going to have the benefits of principal pay down. So between the principal pay down and the appreciation, that gap is called equity. And that equity was able to happen because you purchased that house. Now, if you limit yourself and you purchase a house that is not at your purchase at your max, well, then you're going to limit the amount of appreciation that you gain, right? So I hope I was able to answer your question, but long story short, yes, max out the amount of money that you can borrow from the bank so that you can purchase this house. And I'll do a quick little, I'll just pull out my calculator real quick, if that's okay with everyone here. Can you see my screen here?
Yes.
Awesome. If you're buying a $500,000 house, and houses are expected to appreciate 10% this year, right? So 500,000 plus 10%, now your house is worth 550. But say you qualify for 700,000 and you just don't feel comfortable with that payment because maybe you're going to have to make some sacrifices with your lifestyle, your way of living, right? Well, let's see what you're really missing out on. 700,000 plus 10% equity just in 1 year, right? 770, right? So you just lost $20,000 in potential equity because of wanting to play it a little bit safer and wanting to get a payment that's maybe a little bit more comfortable. Now, I was just on the phone with another one of my clients yesterday, and that's what they're doing. They're qualified a lot higher and they're capping themselves. And because they're capping themselves, it's taking a lot longer to find their house. And in the time that it's taking them to find their house, prices are going up, rates are going up. So it's getting harder and harder every day that goes by with them, right? And that's essentially what they told me. I was speaking to the wife, and all she's told me was, Raul, everything you just said makes sense because I explained it the way I explained it now. And she says, I just got to not go to Sunday breakfast every Sunday. Maybe I just go on Saturdays. She says, I like to take a lot of vacations. And she says, you know what? But my daughters, they're in high school, they're about to go to college. I guess I don't need to take that many vacations. And if I do, it's going to be less expensive because now it's me and my husband and not the four of us, right? So if you don't use all of your loan purchase power, you are pretty much losing out on equity, right? Let me see. Did we have any other questions that were missing? I think Eliasar said, do you need to make a lot of money? How much should I make? So to answer your question on how much money you should make, I think the best route would be to just sit down with the lender, have them evaluate your particular situation, and they'll tell you right then and there, this is what you qualify for. And you're going to compare how much you qualify for to what your goal is. If your goal is an $800,000 house and you go to a lender and you say, hey, can I buy this $800,000 house? They're going to look at your situation. They're going to say, hey, you can't buy an $800,000 house, but you can buy a $650,000 house. And they're going to say, here's a few ways that you can increase your purchase power. Pay off these credit cards, increase your credit score to this amount, or the easy route, right, is just make more money, right? But at the very least, they're going to be able to tell you how much more money you're going to need to make. So there's no really like a blanket answer to tell you how much money you should be making or how much money you need to be making. But the best route would be to sit down with the lender, free consultation, where they're just going to be able to look at your specific situation, because everyone's situation is a bit different, and they're going to be able to tell you exactly what you need to do. Let's see. And then we have one more. I heard rates are already going up and the prices of the homes are also increasing. That is true, Rosalie. Prices are going up and rates are definitely going up as well. And I think that's a perfect segue to the next portion of this Zoom call here, which is a market update. So let me share my screen here and tell you a little bit about what's happening in this real estate market. Are you able to see my screen just fine?
Yes.
Or should I blow it up a little bit?
All right.
There we are. Okay. So here's what's going on with the market. Market shifts. So right now, to answer your question about rates, since December 23rd, the rates were at 3.05. That's the interest rate that you can get on average, right? From December 23rd to February 17th, now we're at a 3.92, almost 1% increase in 8 short weeks. So the rates are definitely going up. The market time in a regular market, the market time, meaning how long it takes for you to find a buyer from the moment that you put your for sale sign up and you put it on the market to the moment that you find your buyer, it was taking 27 days. At the end of January, that was the average. 27 days is how long it took from the moment you put your house for sale to the moment you found your buyer. Now it's at 19 days. In a regular market, where it's not a super hot seller's market, as they call it now, it's anywhere between 90 to 120 days on the market. That's a regular market. That's how long it would take you in a regular market to find a buyer. Anything less than 90 days is considered a hot seller's market, right? Or a seller's market. Anything less than 60 days is a hot seller's market. We're at 19 days. So this is like scorching hot, extremely hot. So what that means is there's way too many buyers right now, not enough inventory. And although the rates are going up, they're still below inflation. And if you look at the rates historically, they're still really low. Between the 70s all the way to the year 2000, the average rate was right around 10%. It wasn't until the year 2000 hit where rates started going in the mid 6s, and then they started going down a little bit. But if you haven't bought a house in those times, or if you weren't even entertaining the market in those times, I guess you won't really realize how good the rates really are right now. So although they have been going up and the average rate right now is right around 4%, from what we've seen, their rates are still relatively low. Now, as far as active inventory, houses that we have available to purchase right now, in the last couple of weeks, inventory increased by 6%. So we have 6% more homes on the market than we did in the last 2 weeks. And this is falling in line with the trend where typically around springtime, as we approach springtime, we get more houses on the market. More houses start to come up. Now, in a regular market, you have anywhere between 6,000 to 8,000 houses for sale on the market. Right now, we have 1,692 homes. 1,700 homes available on the market. And again, a regular market has right around 7,000 houses. We're super short when it comes down to the supply portion of things, right? Now, if we look at what was happening last year, the biggest complaint last year was, hey, there's no inventory. There's no inventory. So comparing it to last year, we actually had 40% more inventory last year. We had 2,200 homes, almost 2,300 homes this time last year, which at last year, looking at these numbers, I was just as shocked as I am now looking at the 1,600 number, right? But we had 40% more homes, or an extra 657 houses on the market, which is extremely low compared to the 3-year average of 5,400 homes around this time, right? 5,400 homes, that's triple compared to what we have going on right now, which is really, really crazy. Now, when we look at demand, meaning how many people are out there really buying a house, right? It increased from 2,400 buyers to 2,500 buyers. And we've added 134 new pending houses, meaning 134 houses found a buyer already, up 6% since the last 2 weeks. So we're finding a lot more buyers right now. Now, if we're talking about the luxury end of things, that means any house above $1.5 million. It increased by 13 homes, so up 3%, and now sits at 414 homes. So out of those 1,600, 400 of those are priced above 1.5 million. And here's the part that kind of blew my mind, right? Looking at the whole San Diego market as a whole, right? So, I mean, the average sale price in San Diego went over $1 million. Let that sit in. The average sell price in San Diego, the average house in San Diego is selling for right around $1 million, which is crazy. The average list price is $981, right? And a lot of people are saying, well, if prices are going up so much, why should I continue to buy? And that's exactly why, because prices continue to go up. You get in now at $1 million, who knows? In a few years, it's going to be 1.2, the average price. And you're just going to keep gaining the benefits of that equity. And in San Diego, that's the name of the game, is equity. You're going to win by your price, your home values continuously just always going up. You hear a lot of people buying in maybe Arizona or Texas because the home values are low, and they've always been low. And if you buy a house out there and you experience some equity, it's probably going to be 20 to 30 grand, not a few $100,000. In the last couple of weeks, Voltaire and I, we do a lot of annual reviews. So what we do is we sit down with our clients once a year and we look at their real estate portfolio and tell them what moves they have. Hey, you can build a house here, you can refinance, buy another house there, whatever it may be, right? And in the last 12 months, we've seen real estate prices go up 24%, which is extremely crazy. 24%. If you bought a house at $1 million 12 months ago, well, now your house is worth 1.2 million, which is really crazy. That's $200,000 without lifting a finger. You didn't do anything for that $200,000, right? I had a client that bought a house and in 12 months came back. We did that annual review. And because of that appreciation, he was able to do a cash out refi and he paid off all his debt. He had like $60,000 to $80,000 just in credit card debt. He paid all of it off because of the appreciation in his home. And as a matter of fact, it was weird. His payment actually went down when he did that cash out refi. Funny how that works. And the last thing that I'll leave you here over here is the foreclosure report, right? Or the distress sales over here. So a lot of people are saying, hey, I'm going to wait for the market crash. I'm going to come up on these foreclosures for the low, right? And so that's not really what's happening right now. Back in 2008, there were over 8,000 people in distress, meaning foreclosure and short sales. Right now, we have between foreclosures and short sales, 22 people in a city that has over 3 million citizens, 3 million people living here. Right? We have over 3 million people in San Diego and only 22 are in trouble, which is really crazy. Back in, again, 2008, we have over 8,000 people. Right now, we have 1,600 homes on the market. Regular market has 7,000 homes available for sale. In those times, we had over 16,000 houses for sale. And new builds, they were building new houses in those times, back when the market crashed, they were building about 16,000 new houses a year. Right now, developers are only building right around 1,600. That's the average in the last couple of years. So we're not seeing a lot of houses hitting the market right now. So to all of the people that are saying, hey, I'm going to wait for this market to crash, there's really nothing that is indicating for a market crash. As a matter of fact, there's a lot of factors, especially with the low rates and the low amount of inventory, that are actually indicating that home values are going to continue to come up. A lot of professionals, don't take my word for it, just don't take Claudia's word for it. Try to do some more research on your own, and you'll see that a lot of professionals are saying, hey, home prices are going to stay strong. Home prices are projected to go up 10% by the end of this year, but rates are also expected to go up. Now, I don't have a crystal ball. I don't know exactly what's going to happen by the end of the year, right? But everything that they're saying it's falling in line. I am seeing a lot of equity in a lot of people's houses. Claudia, did I miss anything?
No, I think you did a great job going over the market, the San Diego County market, and it's intimidating. The numbers are like, whoa, that's how much a single family is going for and how low the inventory is, which can be very scary. But with the same token is it's worth it. It's worth going
Yeah.
to the max of your loan. It's worth locking in that rate. We were also comparing if they gave you the chance to lock in the gas price at $5, would you lock it in now or,
Hello.
keep going up and down,
Hola.
I think I heard a loud no, right? But if you think about it, prices were going up on gas and they're still going up. I mean, every single
Yeah.
time I look online, I mostly hear about LA because I think they're getting a little crazy, but LA has been, I think San Diego's been following LA, and I'm not a professional in that area, but just from what I've seen, right? Everything that I've seen that happen in LA with the gas prices happened in San Diego. When it started hitting $5, then I started seeing it hit $5 like a month later, or maybe a week or two later in San Diego. It hit $6, and now I'm driving around town and I'm seeing gas stations at $6. Now I'm starting to see that there's some gas stations in LA at $7, and I'm like, whoa, right? So if you lock it in at $5 now, sure, it's really high, but I mean, we're approaching $6 on average. So if you locked it in at $5 and gas prices hit $6, you're looking like a genius, right? And
Yeah.
Voltaire, he has 31 tenants paying him rent around town. So he believes in real estate heavy. He's buying real estate a lot right now. Last year, he bought 7 houses, kept 5. This year, his goal is to buy 15 houses and keep 10. So we're avid buyers in this market at the same time. So we're not telling people to do something that we won't do ourselves, right? So we heavily believe in real estate. But with that being said, Voltaire's always in the market, and buying a house, it's never going to be easy. It's never going to feel like, oh, this is the best deal I'm ever getting over here. It's always going to be a scary move. And it's never going to really set in on how good of a deal it was, or I guess how bad of a deal it was, until a few months after, right? I've caught Voltaire in this office running the numbers. As soon as I come in the office, he's running numbers. I come back from lunch, he's running the same numbers on the same property. I'm about to leave. It's 8 o'clock at night, almost sometimes 9 o'clock at night. He's running the same numbers on the same property. Sometimes I tell him, like, hey man, the numbers aren't going to change. Like it's all going to stay the same. And he just tells me, he's like, yeah, I know, man, but I just want to make sure I'm making the right move. It's always scary. It doesn't matter how many properties you buy. It's always going to be scary. So I just want to throw that out there because it's never going to feel super comfortable buying a house. And on that note, rents last year went up 18%. And the person that bought a house last year, their payment went up 0% because they locked that payment in for 30 years, right? And think about it. When people buy a house, they have a payment, they lock it in. I just met with a gentleman who bought a house 12 years ago. His payment was $850. He did a refi, his payment went up to $1,054. That was all they can afford 12 years ago. And home prices, the market, everything was different, minimum wage, whatever it was. But it was still really uncomfortable for them. And we met with him last week, and we asked him, we said, hey, how's that payment now? And Voltaire said, you probably do that with your eyes closed, huh? And he just looked at us and he laughed. Because it's true. $1,000 back 12 years ago to him was like, wow, I can't believe I'm paying $1,000. And if you've been renting 12 years ago, I mean, 12 years ago, you can probably get a 2-bed, 1-bath for maybe like right around $1,000, right? If not, maybe $800 to $1,000. And if you were able to lock that in and still have that same payment now, I mean, you're looking like a genius, right? So I guess what I'm trying to say is that at the moment, it's always going to be scary. It's never going to feel like 100% you're making the right move until a few months later, maybe a few years later, when you see the shifts in the market, the economy, things around us, and you'll notice that home ownership, really, there's just a huge benefit to it.
Yeah, we agree. We're big believers in owning real estate and growing your portfolio. And today's class is about first-time home buyers. So hopefully we get to educate you about the type of market, but also, motivate you to make that move and don't be scared.
Yeah, absolutely. And the last thing I'll leave you with before Claudia takes us into the next step is the average renter, and you guys can look this up yourself, the average renter pays 40% of their income to rent. If you divide that into how many days there are in the month, that turns out to 12 days. That means that the renter has to work. If I'm renting, I have to go to work for 12 days for my landlord. I'm working for him. I'm not working for me. I'm not keeping that money because for 12 days, I have to work just to pay my rent. And that's just an average stat. Some people make a lot more, some people make a little bit less. So your percentage may be a little different, right? Now, if we look at Voltaire's portfolio, his particular set of tenants, it's 35%, right? Which equates to about 11 days, 11 working days, right? So if you're renting and that is true for you, just know that you're probably going to work maybe 10 days, maybe 12 days, whatever it may be in your situation, just for your landlord. You're working just for your landlord. So I'll leave you guys with that. Unless you guys have any questions for me or Claudia about the market update, I'll let Claudia take it to the next step.
Like, no, continue. Thank you guys. Thank you, Raul, for that.
For sure.
So in my portion of today's class, I will be covering Escrow Timeline, which that means, if you guys don't know what escrow is a third-party company that's neutral to the seller and the buyer, and they will come into play once we're done shopping and you've looked at homes. And before I get started with that, I also wanted to point out with the market update, 3 things that will make you a strong buyer in this market is having your down payment. Having assistance is nice and it helps, but really having coming in with your own down payment makes you a strong buyer. Having your own closing costs and going in at the highest and best. Because if you're trying to play it safe, it sounds scary, but I think if we look back at the last 10 offers that we've gone acceptance on, it's been because our buyers have listened and made it, their highest and best. So we've been able to lock them in. John has a question.
Yeah, hi. Hello, everybody. My question is for us renters. You said, something that makes you a strong buyer is a down payment. So for a first-time buyer, what percentage of a down payment or how much money would you say a first-time buyer needs?
Yeah, a first-time home buyer can come in with a FHA loan at 3.5, or you can also use a conventional, which they allow you to come in 3.5, 5%, depending on your whole scenario. The lender will advise you which loan is better for you. I know FHA has a lower, I was just in a deal where my buyer was coming in conventional and she switched over to FHA because the rate was going to be better. So it all depends. The lender will determine that and go over that with you. But anything that you come in with less than 20% down will need a private mortgage insurance. But as a first-time home buyer, you can come in as low as 3%, sometimes 0 if you use down payment assistance.
And there's no blanket answer as to like, oh, if you have 20 grand, you can buy a house, or if you have 10 grand, you can buy a house, right? Because everybody's situation is a little different and everybody's after a different kind of house. Some people need a 4-bedroom house because they got a big family and that's going to cost you $700,000-800,000. Some people may be just a single person and they just need a 1-bed condo and they're cool with that, right? So if you tell that 1-bedroom condo person that's cool with that, oh, you need $50,000, we might mislead them, right? And the last thing that we want to do is mislead anybody on this call. We're just giving vague information, general information to help you get on the right path, and mostly just kind of get rid of a lot of these myths that come with, and these misconceptions that come with home buying, right? So we'll throw our information into the chat again, and we encourage you that if you want to know specifically in your situation, hey, Raul, this is what I want to buy. How much money do I need? I can do it a little bit more personable. Claudia can do a little bit more personable, where we look at your specific situation and we're able to give you a better idea for you, right? Because the last thing I want to tell you, John, is say, hey, you need 20,000 when really you're trying to buy this mega mansion where you might need a little bit more than 20 grand, right? So there's a little bit more question asking that comes with that. But again, we'll throw our information into the chat, and anybody that is curious about what they can do and compared to what their goal is and how prepared they are now to achieve that goal, please give us a call, shoot us a text message. I threw Claudia and my cell phone number in there, so you guys can call us or text us anytime. I see nobody wanted to put their camera on except for a few people. So I know you're a little shy, so maybe a text message works better for you. So just know that those are cell phones that we're working with over there. So feel free to just text us, no problem.
Awesome. Thank you so much.
Yeah, for sure. Thank you for asking, John.
Yeah, so yeah, in this market, being a strong buyer does help, but nonetheless, I think Raul and I and the Lepe team were full-time agents, and if you're committed, I know we're committed to you. So the portion that I will be going over is the average. Can you see my screen?
Yeah, there
Yeah.
it is.
Okay, let me.
So this is from the moment that you get your offer accepted to the moment that you get your keys, everything that happens in between.
Yeah, sorry, let me start sharing it from this side.
For sure.
Okay, this works better for me.
I think Claudia's still learning how to use the double screen. No, I'm just kidding.
That and my camera's on this side. and it's on
Okay,
this
okay.
side. Okay, so day one is the day that we've negotiated price, terms, and possession date. So day one would be the day that both the seller and the buyer came into an agreement of price, terms, and possession date. Your offer will have timelines. So the timelines can go up to, this kind of market is usually a 25 to 30-day escrow. It's really rare when it's a 45-day escrow, but it's also possible. So for today's, we'll say it's a 30-day escrow. So day one, escrow opens and your offer is accepted. And you will have 3 days to submit an earnest money deposit that demonstrates to the seller that you earnestly intend to purchase their home. And that deposit will go into escrow, since escrow is mutual to both of you. Did you have a question? Yeah. I think someone has a question. Yeah.
I don't see anybody, but I do, Claudia. Is that extra money aside from a down payment, that earnest money deposit?
No, good question. That money can be from your down payment funds or your closing cost funds. So, which maybe I can, or I don't want to derail us. We'll focus on this timeline. Yes, it's not an additional deposit or extra money. It's could be the same funds that you're coming in to close the deal. It would just be an escrow.
Cool. So if my down payment is 15,000, I'm not coming up with extra money for the earnest money deposit. I just take a little portion of that 15 and give it up front to show good faith.
Correct. Yes.
Got it.
Yes. And then within that same timeline, the seller has 7 days to provide to you disclosures. Disclosures in the state of California, the seller is by law required to disclose everything they know about the property. They painted 5 times, they replaced windows. If there was a flood, anything they know, they have to disclose it within 7 days. And within that same time period, and in the very beginning, my job would be to book your home inspection. There will be out-of-pocket expenses, which are your bank will require an appraisal. An appraisal is to let the bank know that what the property is worth. So the lender will take care of that, and that would be an out-of-pocket expense. And then you have your general home inspection. You hire an inspector to come inspect the home, and he'll give us a walkthrough and let us know what needs attention. If there's anything else that needs further inspection, that's when we hire additional inspections like a plumber, electrician, a roofer. So we start off with the general inspection. And then because we're in California and our homes are made of wood, we do also have a termite inspection done. So those are out-of-pocket expenses, and we want to do our inspections as soon as possible because you want to know if this is a home for you or not. I think is there a question on, can someone?
Yeah, I think Santiago said, can you guys give us the names of some of the best lenders out there? And that's kind of hard to do, Santiago, simply because everybody's situation is a little bit different, right? So what we do is we actually have a variety of lenders that we work very closely with. We vet them, and for the most part, we've done business with them for a number of years, and they all specialize in different things. If you're a first-time buyer, we work with one particular lender. If you're a VA buyer, military, we have a VA lender that we typically pair you up with, right? There's different specialists for different situations. And so what I would encourage you to do, Santiago, is if you have access to the chat right there where you see my number or Claudia's number, give us a ring after the workshop and tell us a little bit about your situation, and we can tell you what the best lenders we think are for you and your situation.
Yeah. Okay, and then going back to our escrow timeline, your offer also comes with contingencies. Contingencies is your right to cancel as a buyer and protects your deposit. Your contingencies are inspection, loan, disclosures, appraisal. So once you start taking care of those items within that timeline, that's when you start removing them. So for example, you have 10 days to do all your inspections and review disclosures. So on day 10, the seller will ask you to remove that contingency. Removing that contingency, you're telling the seller that you're moving forward, that you're okay with what you found out, what you saw, and you're moving forward. So removing them is good faith and moving along with the contract. If there's something that you can't look past and you decided to cancel, that is when you want to cancel, because then you can walk away with your deposit and the only money spent is the out-of-pocket expenses. Once day 17, day 21, by then you should have probably just the loan contingency, and you remove your last contingency. By then the lender knows that loan docs are available for you and you are ready to close the deal. After removing all your contingencies, if you decided to cancel, the seller can potentially be left with your deposit. Every situation is different, but our job would be to make sure that your contingencies protect your deposit, and we keep a open communication to make sure that we know that you are still 100% committed to the deal.
For sure. And I just want to make it very clear that as agents, we have a fiduciary duty to all of our clients, right? And what that means is that we have your best interest over anything else, our commission, making the deal, whatever it is, right? We have your best interest over everything. And we treat your money as if it was ours, right? So that deposit, that good faith deposit, that's money that in hindsight, you're risking, if you will, right? If you were to not perform, meaning not do what you said you were going to do in the contract, right? And all of these contingencies, like the disclosures, the inspections, the appraisal, the loan, all of those items are things that protect you as the buyer to cancel the deal, keep your deposit because of something you identified on this property. If the seller gives you your disclosures and in there says somebody passed away in the master bedroom, and that's not something that you feel very comfortable with, you by law have the right to cancel this transaction, get your deposit back, and we go help you find another house. Now, if you say, you know what, I think I'm okay with that, I'll live, and you sign off on a piece of paper saying, I remove this contingency. Well, you can still cancel. Say you change your mind the next day, you can still cancel, but you don't have the right to your deposit due to that contingency, right? So we just want to let you know that all of these contingencies protect your deposit and your right to cancel and not lose any money. And to Claudia's point, if you do cancel and keep your deposit, the only money that essentially you will be, I guess, losing will be the money paid throughout escrow, meaning the appraisal, the inspection, and the termite inspection.
Yeah. And then after that, once you have escrow will get you scheduled with a notary. I was going to say hook you up with a notary.
They hook them up.
Yeah, and you sign your loan docs, you make your last wire into escrow, and then it records title with the county, and we meet you at the property to hand over keys. So it's a smooth selling, sounds intimidating, but this is what your offer contains. This is what it's about.
For sure. And if you've seen Voltaire, he's a young dude, but he's got a little gray in his beard, right? And that's because our job as your agents is to take on all of the stress, all of the hassle out of home buying. So all you have to do is tell us what you want and we make it happen. Hey, Raul, I want that house. Hey, Claudia, I want that house. And we do our very best to negotiate that house for you. We don't win every negotiation. We don't just get you every single house that you want, right? It is a little bit of a process, right? But once we do find you the house that you really want, our job is to facilitate this escrow process so that you don't have to worry about a thing. We walk you through every single step. Hey, Mr. Buyer. Hey, Miss Buyer, here are your disclosures. Let's review them together. Let's make sure you understand everything that's entailed with that, right? We have 10 days for the inspections. We as your agents recommend these inspections that you do them. You don't have to have a home inspector. You don't have to have a termite inspector. You can just buy the house without doing any inspections. We don't recommend that because of course you might be buying a house that needs a new roof and you don't even know it, right? And that's 30 grand right there. And I don't know about you, but I don't want to buy a house and then have to pay 30 grand for a new roof.
Yeah.
So, but I do know that there's a lot of things that go with this escrow timeline and just home buying as a whole. And Claudia and I don't know if you have anything else to add, Claudia, but I know that we wanted a plan to have some time left over to be able to answer anybody's questions. So I don't know if anybody has questions specific to the escrow timeline or with the market update, any myths, whatever it is that you want to talk about with home buying. Claudia and I are here to just give you our time. We want to give you access to people who are doing this every single day. We're full-time realtors. We don't do this part-time. We don't do it when we feel like it. We're in here every single day. We're in the market every single day. The average agent helps about 4 to 5 families a year. Our team over here between Claudia, I, Voltaire, Vanessa, we helped 85 families in 2020. We helped out 87 in 2021. And our goal is to help a lot more this year. What that means for you is that you're dealing with a team who's in the market every single day and that knows exactly what's happening. And we're seeing every single market shift that's happening. So please take advantage of this time now that you have a couple realtors on the call over here. Let us know what questions you have and any concerns, anything that didn't make sense, because I guarantee that if you have a question about it, somebody else probably does. And maybe they're just a little shy to say it, right? But I promise we're here to help and we're here to answer any questions. So I don't know if anybody has any questions for us.
Ask, please. Anybody? No,
I
yeah.
don't have
ask.
any questions, but I think with the answer that we gave earlier was with the percentage for the down payment. I think it's safe to say that if you guys have even 10, 15, $20,000 saved, or if you guys have retirement money, 401ks, access to those types of things, feel free to reach out and then we can go from there and give you guys more information. Because I know if you're not, around percentages and all about math and stuff, you're just thinking, well, what the heck is 3%, or how much is that just in a basic dollar amount? Feel free, sorry, that's my kid, to reach out and then we can give you more information.
Yeah, that's a really good point. Yeah, I mean, we've helped people. I mean, I've helped somebody with the least amount of money out of their pocket was $8,000, right? But I guess I was just a little hesitant to throw that number out there because I don't want to promise that to anybody else, right? Because just because it happened for one person doesn't mean that it'll happen for you. But at the same time, it doesn't mean that it can't happen again, right? So, but Vanessa was very accurate in that. And she brought up something that we didn't touch on, which is retirement accounts, 401k accounts. There's actually little tricks where you can borrow or pull money out of your 401k and minimize the amount of penalties that you're taking on that money that you're pulling out, right? So again, exactly what Vanessa said. If you have questions about, or if you have a retirement account that you think that you may be able to leverage, definitely let us know so we can help you out. At the very least, get you some more information, right?
I'm curious, oh, sorry, I'm reading.
Reading more myths?
No, the chat, we have a question.
Oh, okay, cool. They were making about 80 grand a year.
80 grand.
They were making, the question says, I'm curious, did the person you helped with the 8,000 savings have a higher income? Yeah, they were making about $80,000 a year. They were a school teacher and they ended up buying a 2-bed 2-bath condo in near SDSU, actually pretty close to the Dirty Bird's Wing Spot. I don't know if you guys know that restaurant, but it was like literally like around the corner from there. There's like a little park right there. I think it's Clay Park. So it's like literally right there. It was a really nice area. And yeah, I mean, that was one heck of a deal.
Rolando area, I believe.
Yeah, something like the Rolando area. Yeah, for sure.
We also, well, Voltaire, this was before Raul and Claudia joined the team. It was a long time ago. The market was not as crazy as it is right now. We helped military buyers. They literally bought and they had like $300 to their name. Because, you know, they have that 0 down payment assistance and they got a few credits. And I think their earnest money deposit was $100. And then they had just enough to get the home inspection done. So I'm not saying that's what's going to happen with you guys, but just so you guys have an idea of, there's percentages in place, but then there's things that just, it doesn't hurt to really get your scenario checked out and get some feedback on your specific scenario.
Yeah, and I guess what you're trying to say is that it's a lot more realistic to buy a house than what people think. And just to give you some ideas as to how crazy it is that that person bought a house with $100 as their good faith deposit, your good faith deposit, common practice, is 1% of the sale price. So if you're buying a $500,000 house, your good faith deposit is expected to be no less than $5,000. So for someone to get away with $100, I think that's pretty crazy. It's definitely not common, for sure.
Yeah.
What other questions do you guys have? I feel like we have really good dialogue going on right now.
So do you guys only work around the San Diego area?
Great question.
Great
Claudia,
question.
how far do you drive?
I'll go as far as a full tank goes now.
Ah, I think I have a V8. No, I'm
We
kidding.
actually do work the Riverside area. We go as far as Hemet, San Jacinto. I think that's the furthest that we've done a deal, but I know we can cover that area. Are you looking to buy in that area?
So I'm currently in Corona, but I am looking towards the Murrieta Temecula area. So I was just curious.
Yeah, we definitely, we're actually going up there for a listing this weekend, Sun City. So.
Okay, nice.
Yeah, so we definitely service that area, Riverside County. We go pretty far east as well. We've done deals all the way out in Campo and stuff like that. And one thing that's unique about us is that we have a large networking program. You know, and I don't want to come across the wrong way, but we are part of the top 1% real estate team in San Diego, right? And with that, Voltaire networks a lot, we network a lot, and we meet a lot of people all around the country, right? So we have access to realtors all over the country, wherever it is in the United States, that are top producers. So if you say, hey, I'm moving to Texas, sorry, Ro, you can't help me because you only have a California license. Well, that may be true, but I know somebody in Texas that is a top producer, not just some random agent from Zillow that you're hoping does a good job, that you're hoping knows the market. I mean, we know top producers in just about any state. So even if you're looking to move out of state, or if you have friends and family that are moving out of state, let us know. And at the very least, we can connect you to somebody who really knows what they're doing out there.
And then the next question on the chat, you want to cover that?
Besides reaching out to you all through text, is there anything else I can do in the meantime to prepare to buy a house? Yeah, you know, I think the first thing is just getting educated on the process, right? Which we kind of did right here. The next step is to meet with the lender. I always encourage everybody, even if you're saying, I'm not ready, I'm a year out, I'm 2 years out, that's cool. Meet with the lender. They're going to meet with you for free. They're going to sit down. And even if you're like, no, I don't want you to run my credit, they'll respect that. You can pull up your credit on Credit Karma, or your bank app often tells you your FICO score. It's not going to be the most accurate, but at least it'll give you a starting point, right? And they're going to be able to look at your situation, get an idea of where your credit is, where is your income, how long have you been working there? And they'll be able to tell you, hey, based on what you're telling me, if I run your credit and your credit really is where it is, where you say it is, then yeah, you can buy an $800,000 house. Or they might say, oh, that's where your credit is at. Okay, well, if you can pay off this credit card a little bit down and maybe get rid of this car payment, you'll be able to qualify for whatever it is that you need. So to answer your question, I encourage everybody who is thinking about buying a house to reach out to a lender, sit down with them, and just have a free consultation with them. And if you need a recommendation, we are more than happy to recommend you a lender that we work with. We have about 5 to 6 lenders that we work with that, again, specialize in various different types of clients. So before I throw out a name or a lender and contact information, I and Claudia would like to know a little bit more about your situation so that we can connect you to the right person. Because the last thing we want to do is, if you're military, we connect you to a first-time buyer guy that has no idea what VA even is, right? So we just want to make sure we connect you to the right people. Great question. Thank you, Tina. Appreciate it.
Yeah, and I just wanted to add, we do also free buyer consultation. So sitting one-on-one and getting to know your situation, like you mentioned, is probably also a good next thing to do. And if you're not buying now, we can do a roadmap for the steps to come for end of the year, or, you won't know where exactly you are at unless you run numbers with the lender. And then that will give you a clear vision on, like, for example, what base you're in to getting home. So running your scenario, meeting with us and seeing where you are at, and then doing the same with with a lender, it's also going to be key to getting you there.
For sure. Thank you, Claudia. And then Rosalie has a question. Is it true that you only have 30 days to find a house after you are approved? That is not necessarily true. So the 30-day rule really applies to this, right? When you go with the lender and they give you this approval letter, it's because they just saw your pay stubs in the last 30 days and your bank statements in the last 30 days, right? Now, say it takes me a little bit longer than 30 days to find you a house. Say we're on month number 2, and midway through month number 2, we get you an offer accepted, right? Well, your approval is still good, but what they're going to want to do is recheck your pay stubs and recheck the last 30 days of bank statements to make sure that you're still making the same amount of money, to make sure that the down payment you told them that you had in the last 30 days is still there, and that there's not random cash deposits coming in, right? Because one thing about buying a house, if you got pillow money, if you got 20 grand just under your mattress and you try to use that to buy a house, the bank's not going to like that. They're going to ask you to season the money, if you will, and they're going to tell you, hey, deposit the money in the bank, leave it there for 2, maybe 3 months. That way we can say it's been there for a while. We're not doing any money laundering or whatever, and you can go and you can buy your house. So that's more so why they say 30 days. A lot of lenders want to re-verify your income and everything else that goes along with getting you approved with your loan every 30 days, because they want to make sure that you still qualify for this loan.
Yeah, a pre-approval should be, a pre-approval should be good for 90 days unless your financials change or income went up, then you just update them with new information.
For sure. And you said, if so, do you need to keep applying for a loan every 30 days? You won't need to keep applying. If anything, once we do find you your house, they're just going to ask you for updated pay stubs and bank statements. So, and while you're in escrow, before escrow closes, they're going to run your credit again anyways, just to make sure that you didn't buy a car in the middle of escrow and now you don't qualify for that loan, right? But no, you don't need to keep reapplying every 30 days.
Yeah. Next question is, how long do you need to be at your current job to get approved for a home loan? 2-year employment history. And a client asked that question today earlier, and they're switching jobs. And I told them as long as it's in the same career path, like, teacher,
Same field or industry.
Same industry, then it still counts.
For sure. And there are many programs too where you can bypass that 2-year rule. So if you feel like you have some money to buy a house, or you got some down payment to buy a house, or you just want to explore buying a house, but you haven't been at your job for the last 2 years, there's programs out there, again, where you can bypass that 2-year rule. It just won't be your cookie cutter loan that a first time buyer may get. You may have to jump through different hoops. I'm not saying that it's going to be difficult, but you can bypass that 2-year rule.
Yeah. The how long do you next question is, how long do you need to be at your current job to get approved for a home loan? 2 year employment history. And a client asked that question today earlier, and they're switching jobs. And I told them as long as it's in the same career path, like, teacher,
Same field or
What's-
industry.
Yeah, same industry, then it still counts.
For sure. And there are many programs too where you can bypass that 2-year rule. So if you
Yeah, different lenders have different programs, and those programs have different guidelines. So that's why it's also like when Raul says, reach out to us, run your scenario by us. We would choose the lender that has, those guidelines that would fit your scenario for you to be able to accomplish your goal of buying. So you, like Raul said, I think we've seen people able to purchase with as low as a year or even 6 months of employment. They just verify with the employer that, you have a job locked in, and it's not like a temporary agency job or anything like that, you're gonna not work there in the next year type of thing.
For sure, for sure. And I know we've reached 7:30, but one of the last things that I want to leave y'all with is I've had a lot of people ask me about getting a home loan with an Itin, right? If you're not like a citizen, you don't have a social, but you got an Itin number, can I still buy a house? And I just want to give out some more hope out there. Yes. If you have an Itin number, you can still buy a house. If you know somebody that has an Itin number, let them know. If you have an Itin number yourself and you want to buy a house, reach out to us. We'll tell you exactly what the process will look like to get you on the path to buy with an Itin number. So don't limit yourself. There's so many different programs to help with so many different scenarios. And again, I have a specific lender for an Itin, because if you go to just walk into a Wells Fargo, they might not be able to help you. I don't know what the rules are, but it's less likely than some of the people that are actually specializing in those kinds of loans. But before we wrap this call off, I just wanted to ask one more time if anybody has any pending questions, concerns, or scenarios that they wanted to go over.
Yeah, and I hope this was helpful. I know we do this every day, and sometimes we forget to like simplify it or break it down easier, but I think you guys just showing up makes it all worth it for us.
Absolutely. And I mean, it's Thursday, it's late, you want to hang out with your family, you want to eat dinner. And the fact that you guys are here on this call means the world to us. So I want to say thank you. And I want to say that I appreciate and admire your dedication to your goals of being homeowners one day. So thank you guys all for joining this call. We'll let you know when the next workshop is. Keep an eye out for that email, for that text, for that call. We'll keep this going. We love educating over here, and we have classes that cover various different topics. So we'll see you on the next one. Thank you for joining.
Oh, really quick,
Oh,
for
yeah.
the next class, we do have the tax benefits of owning real estate workshop of tax benefits of owning real estate. So if you guys know of anyone, or if you guys want to learn what the benefits will be even further as just owning a home, I would highly recommend it. You guys can also send us your email if you want to join our newsletters and get all this real estate information. So we would love
And the
to.
date for that next one is on the 31st, right?
Yeah, 31st, 6:30,
30.
via Zoom, and that one will be also very informative.
And if you're not getting our invites for all of our workshops right now, because we do 2 a month, if you're not getting our workshop invitations via email, throw your email in through the chat. You can send it privately to myself or Claudia, and we're going to jot it down, and we're going to put you into our system so that you at the very least get our emails inviting you to our workshops, because we, again, cover a lot of different topics. Our next one's going to be the tax benefits of owning a home. And we just want to empower all of y'all. So I'll stay on for like another minute or so just to see if anybody wants to throw their email out there so I can make sure that you get our invitations. But is there anything else that you had to cover with us, Claudia?
Yeah, no, I think that's all. I'm curious to see if Jennifer and Edward have a question. I feel like they have a question, but maybe they're too shy. You guys are good? Oh, I think they're typing it.
For sure, for sure. All right, so this wraps up our call, guys. Thank you so much again for joining. I'm gonna again stay on just for like a minute later just to make sure I get everybody's emails. But unless you have anything else for us, I mean, we're good over here. Thank you for joining.
Yeah, I'll stick around. Oh, thank you. Thank you, Lizar. You're awesome.
You
Shut
can
up.
finish your question or what you were typing, Jennifer.
I can't afford to buy.
I can't.
You
That's a
never
really good
know.
point.
You
No,
never
that's a
know.
really good point. I can't afford to buy in the neighborhood that I want to buy, right? Or maybe I can't afford to buy the house that I really want to buy. And I just want to let you know that the average person doesn't buy their forever home until about 4 houses in. And it's actually a little bit of a step up process, right? You buy the house that you can get into right now, which is typically, for the most part, for average, most people, right? I'm not saying that may be your scenario, right? But for most people, it's going to be like a condo, right? You stay there for the next 3 to 5 years between your principal pay down and the appreciation that you're experiencing, that gap, that equity, you get to roll that over into your next house. So say you got $50,000 in equity and you saved up 20,000 in those 3 years, or maybe you saved up more. Well, now you have 70,000 towards your next house. So leverage that condo or your first house to be your stepping stone onto your next house. Again, through principal pay down and appreciation, that gap, your equity is going to help you catapult you to your next house. I helped out a family go from a 2-bed, 1-bath condo to a 4-bed, 3-bath single family house on a 10,000 square foot lot in National City. I mean, it was a huge jump. It was a huge jump. He had 3 kids literally all crammed in one room. And now each kid has their own room. It's a beautiful thing, but he sacrificed for a little bit, right? So definitely don't rule that out.
Good. I like that. Well,
Yeah, thank you.
thank you. Perfect. Awesome. This was great. I think you did awesome, Raul. Thank you.
Yeah, you did really well too. And I think our audience did a really good job in helping us dialogue and really get to the bottom of what really is kind of maybe not holding them back, but what push do they need to be able to buy their next house, right? So I'm not getting any more emails, or are you getting any more emails, Claudia?
Nope, we're good.
All right, we're good to go. We're wrapping this up. Thank you all for joining again. You have a great evening.
Yeah,
Thank you,
thank you
guys.
guys.
Night.
Thank you, John. Adrian, thanks for showing up late, but you did it.